and welcome to SIF Insight. Specialized Investment Funds or SIF is a new addition to India's investment landscape. At a basic level, SIFs have been introduced to bridge an important gap in the market. On one side, we have traditional mutual funds, and on the other, we have high-ticket investment products like PMS and AIFs. SIFs aim to bring the best of both worlds, investor-friendly features of mutual funds and flexible investment approach of AIFs with a ticket size of rupees 10 lakhs. The first SIF was launched in October 2025. Since then, the category has shown significant growth with an overall AUM of more than 12,000 crores. At SIF Insight, our effort is to explain this category in a way that is simple, detailed, and useful so that SIFs can be understood properly both as a product category and as an evolving opportunity within the Indian asset management. And for that discussion, we are delighted to have with us Mr. Gaurik Shah, Senior Vice President of Equity Investments at Mirae Asset. Mr. Gaurik Shah, a CFA, has over 19 years of experience across public markets, alternate investment strategies, quantitative investing, and derivative-driven portfolio design. Over his career, he has managed Category 3 AIF strategies and global quantitative mandates across institutions such as Avendus Capital and Monsoon Capital. Also, we have with us Mr. Vivek Chaturvedi, the founder of the SIF Insight and Platizio Services LLP. He is a certified financial planner with over 25 years of experience across financial services and international business. He has a deep understanding of the Indian financial markets and equity derivatives and algorithmic trading. Mirae Asset Mutual Fund is among India's established AMCs from the past 15 years. In India, the AMC manages over 2.29 lakh crores of AUM and serves more than 80 lakh folios. The AMC is now expanding into the SIF space through Platinum SIF with its hybrid long-short strategy, bringing a more advanced, risk-managed investment approach within the mutual fund framework. So this conversation is a great opportunity to understand how this new SIF category is evolving and how industry participants are approaching it.
Yeah, thanks again for a very kind introduction.
Welcome to SIF Insight, Mr. Shah. Thank you for
Thanks a lot.
joining us.
Thank you. It's my pleasure.
So, for our viewers, could you please share what is the difference of SIF from mutual funds and AIFs?
Sir, so basically SIF has a lot of good part about which is part of the mutual fund. What you expect from mutual fund is a product which is transparent, which is tax efficient, which is cost efficient. So this three main feature of mutual fund remains the same. Apart from that, what we have is flexibility. So there are certain strategies which we were not able to do in mutual fund, which we have been doing in structures like prop book, hedge funds, AI funds for a long time now, which the regulation didn't allow us to do it, deploy it in mutual funds. With an SIF guidelines, that flexibility is now available, and then we can give a investor the experience which up till now he did not have access to. Okay, compared to AIF, there's two main difference. One is tax, and tax is AIF is a very tax inefficient product. Almost to in one sense they have to generate almost 40% more return compared to us just to be at the same level, and that is a huge task. Apart from that, AIF also has comparative little less transparency, little less cost efficiency. But what AIF has is more flexibility. Within SIF, the headline number is two things one has to remember is that first, there is no leverage. Derivative strategies are allowed to be used, but leverage is not allowed. Second thing, you can have a naked short position till 25%, but that 25% short position also has to come under the ambit of 100% gross exposure.
Correct. Thank you for the clear explanation about the difference. So, Mirae Asset has launched, is launching
Yeah.
Platinum SIF hybrid. So, why hybrid at this moment?
Sir, as I said, one of the main advantages of SIF regulation is it allows flexibility more than anything else. Okay. There's no leverage, so going aggressive and giving returns which is higher than your typical mutual fund, long only mutual fund, is going to be slightly difficult. Currently, I think hybrid space gives you the best option available, where you can have a product which has a clear distinct value addition compared to the current existing product within the mutual fund ecosystem. Okay, so I think that is one of the main reason which we have decided to start our SIF journey with hybrid space. And within hybrid, I think we are going to be on the conservative side, and reason for choosing that particular path is also that we feel that SIF is going to be a new product for investor. And for any new product, first thing is we have to gain investors trust and confidence, and that will be happen only if the investor has a good experience with the product. And if with the aggressive strategies, there is a chance of more volatility, there's chance of being more misconceptions. So we have chosen to focus more on giving uh, investor a good experience, at the same time giving them a product which has a clear distinct advantage over the existing products available in the mutual fund ecosystem on the comparative risk framework.
So, what exactly is the strategy in the hybrid subcategory that you're launching?
So
It is
okay,
composed of several things like
yeah,
arbitrage, debt, hedged
sure,
equities, special
sure,
situations. Can you
sure,
shed some light on that?
sure. So first of all, let's understand कि हमारा positioning क्या है. This particular product is positioned as an arbitrage plus category, which is going to be between arbitrage and equity savings fund. That's the risk framework we are talking about. What that means is there's a key, as I said, one of the key objective, one of the it needs to have a clear distinct advantage compared to the existing products. So let's say arbitrage. Okay, arbitrage is a flat return product. Equity savings fund is a linear return product, meaning that it has a linear participation in the equity markets movement. When the markets are up, they'll have typically between anywhere between 25 to 40% participation on the upside. They will have similar participation on the downside as well. Our fund, our endeavor will be to give a non-linear returns, meaning on the upside we would uh, our upside capture ratio will be much higher than our downside capture. So upside participation will be closer to equity savings fund, while downside protection will be much better. So that's the goal. Now, how are we going to achieve that? So there are four parts to the strategy. First thing is collar and arbitrage. Okay, that will have almost around 70% our deployment will be with collar strategy and arbitrage strategy. Okay, so let's first understand collar strategy, and then we will come to why arbitrage is also there in the mix. So collar strategy, it's a bit of a complex three leg derivative strategy, but practically what investor needs to understand is that collar strategy is a strategy which has a capped upside and a capped downside. What it means is that till certain point on the upside market capture will be there, and beyond a certain point they will not participate in the market's upside in the during a month. Similarly, on the downside also, we will participate till certain point, and beyond a point we will not participate. What that means is we have a if the market crashes 10%, 20%, our downside will be limited to certain extent. Okay, we will have bought a put which will restrict our downside. Okay, uh, but that also means that till that point at which we have bought a put, there will be a downside. Okay, so whenever the markets are negative, it's likely to see a capped loss, but still loss so hoga thoda bahut.
Correct.
Okay, so uski wajah se what we have required is, if the markets are bearish condition, we need a strategy through which we can defend our fund, and that's where the arbitrage comes into picture. So arbitrage is a strategy with which we can defend our fund. So just to recap, collar strategy, we buy a stock, sell a call. So the level at which we have sold a call, till that level we will participate in the upside. Let's say if we have bought sold a call of 3% out of the money, till the markets are up till 3% upside in the market, we will be able to capture. Similarly, on downside, we will have bought a put, so our losses will be capped at that level. Okay, and since we have to bear that cost or bear the losses till the point at which we have bought a put, हम लोग को arbitrage रखना है, so that we can move towards arbitrage strategy when the markets are bearish and we can defend our fund. Apart from that, there will be special situations where we are trying to maximize our return with the kind of trades which are available in the market. They are not always available. हमेशा नहीं रहते मार्केट में, जब भी बीच बीच में आते हैं, लाइक किसी का बायबैक आ गया, किसी का मर्जर डीमर्जर ट्रेड आ गया, या फिर कोई पेयर ट्रेड है, जिससे हम लोग को वी कैन मैक्सिमाइज अवर रिटर्न, वी कैन इंक्रीज अवर returns compared to collar and arbitrage strategy. If there are such trades available in the market, we are going to take advantage of those trades and try to maximize our returns. And the fourth leg is DAT strategy, which is split between two. One is a accrual based high quality credit strategy, and then there will be a liquidity strategy. So within accrual based high quality strategy, what we are going to focus on is the kind of credit papers which are, let's say, AAA, AA plus, and the companies which we like. Okay, so that we are not going to be very aggressive on that. Currently, we are looking at 0 to 3 years kind of a duration papers. But going forward, if the interest rate environment changes, we may change our stance on that. But that is not going to be very aggressive calls. Neither they are going to be very frequent calls. And then there will be a liquidity portfolio, which will be basically your traps, your T-bills, etc., which will need for a cash management. So that's the broad strategy.
Thank you. And so, taking this forward, so how would this allocation of the components in the fund change from time to time based on the market cycles or market scenario?
So as I said, see, for us, your DAT strategy is remain going to stay stable. Special situation is as and when the situations or trades opportunity is there, that's when we are going to take it. Then comes the main part, which is your collar and arbitrage strategy, which is where our 70% of our allocation is there. Okay, so there, as I said, collar strategy is a strategy which will make returns when markets are in a better condition. In the positive market, they will have a much better participation. In the falling market, they will have a capped downside, but still there will be some losses, right? And so that's where the arbitrage comes into picture. So in a bullish market, more allocation will be towards collar strategy, less towards arbitrage strategy, and bearish market, more towards arbitrage and less towards collar. And in range bound market, more or less your allocation will be equal to arbitrage and collar.
And with your background in quant trading and systematic trading, I guess you are very well suited for taking this forward, can
Yeah.
you tell us a bit about your background in
So
the
I started
derivatives
my
strategies, automated strategies? Yeah.
career in financial industry as a quant researcher on a sell side firm. I have been working on different kind of strategies since then. After that, I got an opportunity to work with RBS on the Delta One desk in Hong Kong. Then I started working with Monsoon Capital, where we were trading various kind of different structures, including FPI fund. Then we were trading Asia Pac equity trading funds. Uh, then we started AIF Cat 3 fund. Then I joined Avendus on their AIF Cat 3 platform. And then I've joined Mirae since last 6 months. So one of the things about being a quantitative strategist is that you keep on uh, working on backtesting different kind of strategies. Okay, then you have that flavor. You know, then basically strategies work. Different strategies work in different market environment. And work of a quant fund manager is to combine different strategies in a way that it fulfills the mandate. Okay, either on the risk side or return side, one needs to combine different kind of strategies according to the fund's mandate. So you have lot, I mean, we constantly keep on trying out different strategies. Okay, and according to the fund mandates, we mix and match them. So for example, AF Cat 3 fund which I was managing on Avendus, it was a very aggressive fund. The kind of strategies I was running there were very different. Okay, kind of strategies we are running over here is going to be different. Uh, when I was with Monsoon Capital / Pro Alpha Capital for 11 years, we have worked across different product structures. That's probably the advantage we got over that. We had a lot of freedom to try different things, work on different strategies. It's not necessary we may have deployed that strategy. Not every strategy get deployed, but you keep on researching, you keep on getting new ideas, and you keep on learning.
Thank you. With your profound experience in this area, I think your investors will greatly benefit. And uh, what is it? How, for whom it is suitable? For what kind of investor we can say this hybrid strategy is suitable?
So I think, see, sir, my view is it's suitable for everyone. Why I'm saying that? Okay,
Mhm.
I think Indian markets now, Indian investors have now evolved, and every investor will have allocation across the risk spectrum. They understand the benefits of diversification. They, if the investor is aggressive, he may have more allocation towards the aggressive side of the things, but he will still have some allocation to the conservative side. Similarly, if the investor is conservative, he will have more allocation to the conservative side, but he will still have some allocation to aggressive side. So it's not the question of which investor. I think one needs to find a space for this particular product within the allocation, investors portfolio allocation. I think this is a perfect product for the conservative side of the investors portfolio allocation. Okay.
Right.
Uh, Now every SIF product is going to be different.
Mhm.
Some SIF will be conservative, so then we are fighting for the space in the conservative part of the portfolio. Other SIF
Mhm.
may be aggressive, where they are fighting for the space in the aggressive side of the portfolio.
Mhm.
So SIF basically is a product, not either or product. It's a product which complements and fills the gap in the investor's portfolio, which is currently cannot be achieved using the conventional mutual fund products.
Mhm. Correct. Yeah, I think it is a good variety of subcategories in SIF space,
Yeah.
and investor has a choice to choose among them. So it is regarding the use of shorting
Hmm.
in SIFs. It is talked a lot. There is a flexibility of using up to 25%. naked shorts in SIF, would you be using that in your set fund, this hybrid fund?
So, sir, first of all, one has to understand that 25% short uh, doesn't give one particular edge when the markets are falling. It provides a hedge, but 25% is not the hedge kind of a level at which you can give a distinct advantage on that side, taking a call on that side. Uh, but apart from that, for this particular product, as we said, we are not taking any kind of market call. Apart from that, 5%, 5 to 10% flexibility we have kept in a special situation where we'll be direction agnostic. Where if we get an opportunity on the positive side, long side, we'll take a long side positions. When we get a position on the short side, we take a short side position. Apart from that, caller strategy is not market. We are not taking a market call on that. Neither arbitrage is a completely hedge strategy. Only market call is we are taking is in terms of switching between or allocation change between caller and arbitrage. So we are not in that sense using a taking a market call either on the long side or on the short side. But yes, this having that flexibility of 25% short is important for this strategy because caller strategy cannot be deployed in a mutual fund. It does not fit into the mutual fund regulation criteria.
True.
Okay. So because of that 25% short flexibility which is given, we can deploy the caller strategy. Otherwise, it's not possible to deploy caller strategy in the mutual fund scheme of things.
So, and as a closing remark, like what would you let the viewers remember Platinum SIF as?
I would be happy if investors remembers Platinum SIF as a category of products which brings to the table the same kind of trust they have on the Mirae products. Okay, same kind of investor experience. I would say that's what our focus is going to be. We are going to try to add value. As I said, SIF brings certain flexibility on the table, and using that flexibility, we have to give a product which have a distinct value addition compared to the current products available in the mutual fund ecosystem.
Correct. Thank you so much, Mr. Shah. I think it has been a pleasure
Thanks a lot.
speaking to you, and good luck with
Thank
your
you, sir.
NFO.
I hope your investors have more questions rather than answers, I would say, because the SIF is a category which is going to have a learning curve for every one of us. And I would suggest that one has to understand the risk associated with the particular strategy for a particular fund and be comfortable with it.
So on our channel, for information, we have a playlist on derivatives, how caller option strategy works, how bull call spread works, or bull put spreads work. So that is part of the educational work we are doing, because caller option strategy in itself is not very well known.
Yeah, absolutely. Yeah. Perfect, sir. Thanks a lot. Thanks a lot.
Thanks a lot.
We will need support from you guys like you who to educate the investors, because as I said, it's going to be a long journey.
Yeah. Great, sir. Thank you so much, and have a good day.
Thanks a lot. Thanks.
We hope this discussion helped simplify an emerging space that is likely to become increasingly relevant in the investment landscape. We'll continue bringing more such detailed conversations on SIF Insight. Thank you for watching.